You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little show we like to call around here the option block. Everyone's favorite. I know it's my favorite. Hopefully it's your favorite too. Bi-weekly source for all things options related. Yes, I'm talking about the old option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, ever-surprising sometimes, Options Insider Radio Network. And, of course, as always, quite a few programs, 15 for you guys to choose from on the old network. And where can you find all that good stuff? Well, the easiest place, the mothership, the flagship, theoptionsinsider.com, as well as, of course, via a legion, a plethora of alternative outlets. So your of course, your iHeartRadios, your iTunes, your TuneIns, your Pocket Cast, and a lot of you guys like to use that one, Downcast, etc. Any pretty much third-party system will have our stuff. If it doesn't for some weird reason, using some weird Balkan podcatcher, well, let us know. We'll see if we can get it added there as well. Of course, you can always grab the RSS feed and just plug it in yourself and go for broke that way as well. And if that's all too much work for you, don't want to bother with, just grab our mobile app. It's available on all the platforms, and you get pretty much all the shows going back 10 years. Yes, this January now marks our 10-year anniversary here in the old options radio business. The purveyors, the creators, if you will, of the old Options podcast. So check it out via the app as well, available in all the major app stores. And however you listen, including those of you who can join us live every Monday and Friday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, which is, of course, our live streaming service. Check it out there if you are indeed so inclined. We'd love to have you there. Meanwhile, of course, you're saying to yourself, hey, where are the rest of my cohorts, my partners in crime? Well, I believe we are being joined at this moment by one of the aforementioned partners in crime, Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, are you there, sir? And welcome back to the Option Block program.
I am here, and I am not a partner in crime. I am a partner in the Jedi Force. I am not a partner in the dark side. We believe in light, goodness, truth, honor, and the American way, like Superman, the Jedi, Batman, and all the superheroes combined.
Wow, Superman, Batman, and the Jedi combined. Well, that's quite the force you have assembled there. With our team mostly assembled, the Option Pit crew, they're often somewhere in the hinterlands of Texas, doing God knows what. Nothing good happens in the hinterlands of Texas. Of course, I'm kidding for all of our Texan listeners. So, Uncle Mike and I holding down the reins here as we dive on into our second option block of 2017 and indeed kick off the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was cooking, what was firing off, what was lighting it up in today's market activity, and pretty much not the most rock'em sock'em robots of days on the broad street. If you guys remember, of course, back to about a year ago, when we saw just craziness hither and yon everywhere, almost every day in January into early to mid-February. This year, not so much. Most of the major indices closing, exception of the NASDAQ, that continues to rally up nearly 0.5%. The rest of the major indices off about 1/3 of a percentage point or so, and all of that mixed action giving VIX cash a little bit of an inhale, up about 1/4 of a point, right around that 11.5 level. And if you've been listening to Vol Views, any of our other programs, it's kind of been an interesting moment. A lot of people trying to read the tea leaves there on VIX and see what the future holds in store for us. And it's a bit of a challenging time because, just going into the end of last year, we were pricing a little bit more vol in early January. Then it kind of went away post non-farms. And of course, we have Trump on the horizon, earnings, potentially the Fed. So there are some potential drivers for volatility going forward. But right now, things are fairly quiet, and the VIX cash and the VIX futures kind of reflecting that. And Uncle Mike, in this sea of quietude, what caught your eye in today's activity, sir?
A couple things. My beloved Apple, that's not quite as beloved as it once was, but you can't always get rid of old feelings, I suppose. Apple definitely went up a little bit on today. I think that what's happening is that we had kind of a dip in technology later in the year last year. For whatever reason, Silicon Valley and Trump didn't get along, is what a lot of people were saying. But the reality of it is that I think so much money came into the financial sector, as well as the defense stocks and all the quote unquote, and I'm doing air quotes with my hands here, Trump friendly stocks, that I think it was such a piling in of it that there's no way on earth technology could have possibly kept up. So with that, I think that now technology is starting to catch up a little bit. And I'm not talking about a lot of the bigger names like Andrew talked about on the show last week, but the smaller names like Apple. Let me see, XLK, for example. XLK, it's up a little bit today, not a ton. But the main story that I saw from the technology front, we did have a new all-time high in the NASDAQ. I'm not going to say my saying just for the NASDAQ. I reserved that for the S&P 500. Now I'm still going to keep it reserved for the S&P 500, even until the Dow goes over 20,000. So we had that. Also, of course, the big story last Friday with the Dow coming about as close as you can possibly get to 20,000 and actually not going over it. I don't know of any other time. I'm not sure if when at the 10,000 mark, if it came to within 1/3 of a point like it did, and then just kind of bounced down. My wife and I were actually talking about that, and she said it was like watching a New Year's Eve countdown where someone's going 5, 4, 3, 2, up, just kidding. And that's kind of what it was like watching the Dow trying to reach the 20,000 mark. So a lot of things. IBB, the biotechs are starting to rally a little bit. I actually figured that this would happen a little bit sooner than it did when Trump was getting elected. But c'est la vie, as my beloved host of the show would say. So we have a lot going on, and I'm going to talk a little bit more on the metals when we get to the strategy block today as well. So that is what we have, hook, teaser, and all.
Well said, sir. Yeah, we will have a strategy block today because, as you might have deduced, just down to a 2-man crew today. So we thought we'd give Uncle Mike a chance to move his strat block to Monday. If he is so inclined and wants to do one on Thursday as well, I won't stop him. But we are going to do a little bit more strategery today as well. We hit on a lot of different areas. Apple, always interesting one. They are rallying, whether it's directly related or just the rising tide lifts all boats in terms of course, that 10-year anniversary for the iPhone is this year, so some people expecting some big developments there. Why that would cause that to rally today is an interesting question, but still, that is one of the few sources I've seen for optimism going forward for Apple, even despite all the dire headlines. Of course, they're going to be cutting potentially production in China for some of their new iPhones and the other things that are decidedly bearish indicators going forward. Speaking of bearish, you mentioned the Dow flirting. You're right. I don't think it could have, unless it hit that 19,999.99. It literally almost could not have come within a practical sense any closer than it did. I think it hit 19,999.63 on the Dow on Friday. So you're right. Just technically, it would be a challenge to get much closer without going over at that point. So all those people, all your fans, Uncle Mike, who like these big round numbers in the marketplace, all of them stymied, all of them saddened by Friday's failure to break it. And of course, today, like I mentioned, the S&P off right about 19, the Dow off 19,894. So we're not threatening 20,000. Just imagine that, Uncle Mike. I know you're a diehard bull, but imagine that if we got all the way to that level. And then that was it. That was the cusp, the turning point, the breaking point for the bull market. And then we began our big sell-off into a mini recession, retracement, call it what you will right now. And that was it. And that remained the closest we got to 20,000 for the foreseeable future. How would you feel about that?
It wouldn't surprise me because anything's possible. I always tell people I'm long-term bullish, but short-term cautious. So I think that's why you got to be prepared for it. You can have all the goals you want in terms of where I think this, that, or the other thing's going to happen, but you never know. So if that were the case, there will be a high and there will be a low. There's always, most people, myself included, think that the Dow is going to hit 20,000. And then if you were to say, what are the odds of the Dow going over 20,000 within the next couple of weeks? I think most people would say very likely. But you never know. And I've said this on the show before. Someone says, yeah, I did really great selling puts, except for in 2000 and 2008, but who could have predicted that? And then, of course, the answer to that question is, well, the people that were buying those puts from you. So with that, just really embrace it, folks, that anything can happen. Be prepared for it. But I really believe we're going to have Dow 20,000 plus within the next week or so, possibly tomorrow. You never know, but that would be a very interesting point for the Dow to come right back down.
That would be a bit of a heartbreaker for a lot of people, I think.
I think it would. The other thing I would like to point out is that when the Dow went over 10,000 for the first time, it did not close above 10,000. It went above 10,000 intraday a couple times before it actually closed above 10,000. So even if it were to go over 20,000 tomorrow, we still might have a few more days before it actually has a close over 20,000.
Good point there, sir. Way to ease the pain of all our technical fans. But yeah, that would be quite the hashtag heartbreaker if that were indeed to be the closest we get. I mean, you and I, we don't tend to watch, a lot of people in our audience don't tend to watch the Dow as much, and more S&P focused, maybe a little bit of NASDAQ and a few other indices thrown in there. But yeah, those kind of crazy round numbers like that. Doesn't seem that long ago I was reading, Newsweek or Time magazine. They had the big bull on the cover curling up the arm, doing the arm curl with the weight, and it had Dow 8,000 on it. So that doesn't seem like that was that long ago. That was in the mid to late 90s at this point. So I guess history gives you an odd sense of perspective there. We're quite a bit away from that Dow of 8,000. You mentioned the commodity side of the space. That's kind of one of the other interesting stories. Certainly one of the reasons perhaps why the Dow got snatched back from the precipice. Some of those big names on the commodity side getting a little bit of weight, and certainly seeing some interesting developments today as well. We're seeing crude settling off a little bit. Lowest level in about a month out there in WTI and other products, as we're seeing some numbers of the active oil rigs coming online, and that's going to perhaps further stymie whatever cuts they have in production overseas. Of a lot of rigs are coming online here in the U.S. Of course, you also mentioned gold. I know gold is near and dear to your heart. I don't want to tread too much on your strategy block for later, Uncle Mike, but we did, this has kind of been a recurring theme on our TWIFO program is, what's up with gold and when is this seemingly inexorable slide going to come to an end finally, and maybe, at least of today's indication, maybe today and then January is finally that time frame hitting the highest level out there in COMEX gold in about 6 weeks. All this Fed dance certainly factoring in to that equation in a lot of interesting ways. People were, of course, crushing gold because they were factoring in just multiple successive rate increases. Not many people are starting to step back from that precipice a little bit, saying, you know what, maybe we got a little bit ahead of ourselves with pricing in all of these increases and just crushing gold from hovering up close to that 1,300 level and back down to the 1,100 handle these days at 1184 coming out of today. So who knows? Maybe back in TWIFO in some time in the future, maybe not anytime soon, but sometime in the future, we'll be back talking about that, 1,300 risk reversal as opposed to the 1,100, 1,200 that we're talking about now. What an interesting time. I know you mostly watch GLD, not the big COMEX gold, Uncle Mike, but it's kind of half a dozen one, 6 the other in a lot of ways. What are your thoughts on this? Perhaps, again, without trotting too much on your strategy block, are you a little bit maybe happy that this could be the beginning of a turnaround? Or are you still playing it cautious?
Yeah, I think it's definitely the beginning of a turnaround. And then my strategy block's going to be more around an option strategy that I'm employing with silver. But so I guess I can give a little bit of a tease on this. I think that we are closer to the bottom on it, just because if we do have Trumponomics, Trump needs inflation for his style of economics to work. The way with which real estate works well is if you have inflation working on your side. You buy a house for X amount of dollars. The mortgage rate stays the same for 30 years, but you gradually use inflation in your favor so you can charge higher rents year after year. Hopefully the property taxes don't go higher that much for the realtor. And with that, inflation is very much your friend. With that being the case, Trump's going to have policies, most likely, I can't guarantee anything, they're going to be more inflation friendly. Yes, we are going to probably raise rates this year a few times, is what a lot of people believe. But then again, we thought it would be a few times last year. But with that, I think that with the new administration, they're going to do every other thing with which they can to try and keep or get inflation back into this economy. And if that's the case, then we're going to have more of a benefit within the shiny stuff.
You know, we talk a lot about the SPDR ETFs on the show. Obviously, SPY, probably the leading one. Also, you know, your favorite XLF and a bunch of other. There's so many different flavors, so many different areas. One we don't really talk about a lot, and maybe if Grease Meatball was on, we'd be talking about this a little more because he loves the retail side of the fence. Is of course XRT, that is the SPDR retail ETF, closing today about 43.82, kind of unched on the day. But interesting piece come out of Bloomberg today, Mike. And again, this is not where you and I like to play that often, but it's kind of worthy of thought. An interesting piece, kind of just looking at some of the options activity in XRT and some of the related names. And pretty much, at least according to some of the people who are citing in this article, and of course the analysis they're doing, they love put call in a lot of these broad options articles, and they do that a lot here in Bloomberg as well. They've been looking at the open interest in XRT, which is up quite a bit, up about 200,000 contracts over the past month. But they're saying over that time, as that open interest has increased, they're seeing the put call ratio decline markedly over that time. Now, of course, you know, we tend to poo-poo put call here on the show for a variety of reasons. It's not really indicative of what's going on. You know, you don't know what's going on with both sides of those trades. A lot of other things that can go on in the call wing that aren't decidedly bullish, et cetera, et cetera. We've hit on that many times before. But still, it is kind of interesting to mull over kind of what's going on with this sector. This is the name, if you're not that familiar with the listeners. Like I said, it is the retail ETF. Does about 20,000 contracts a day, so it's not doing VIX numbers, but it's not exactly a cheapy biotech either. Today, a little bit lighter, doing about 7,600 contracts today, about even one-to-one puts and calls. Overall, the open interest is actually decidedly put heavy, almost 2-to-1 puts over calls, which is kind of interesting. So maybe despite that recent flurry, overall, the open interest, if you do believe in that put-call ratio, perhaps indicating that people are perhaps a little bit more bearish overall. But still, I also thought it was interesting they brought up an index I wasn't familiar with, kind of funny name though, this group, Bespoke Investment Group. They created a Death by Amazon index, which essentially they call it a basket of retailers with a limited online presence who primarily sell third-party brands. So I guess that would be the Sears and a bunch of other ones out there. We know how well they're doing, Kmart. And that's kind of an interesting index. I like it. They say it's underperformed by I guess the benchmark obviously for that would be Amazon. It's underperformed Amazon by 275 percentage points over the past 5 years. So interesting stuff. I don't know. Do you play at all in any retail names? Or I know you like the broad swath of SPDR ETFs. Has XRT ever factored into your analysis at all? And what are your thoughts on this kind of perhaps potentially bullish inflow of options into these names?
Not too much. I like WXRT, the Chicago radio station. That anyone who around Chicago knows about that radio station. But aside from that, not really. I mean, just looking at this from a technical standpoint, XRT just went rally ho, almost 20% shortly thereafter the election, and it's given quite a bit of it back since it peaked on, I believe it was December 8th. So there's been a lot going on with that one. If I were to guess of what all the put activity is going into it, I'd be more of a put seller in this right now personally. Now, I've not analyzed the volatility on it, so I couldn't really give you a fair assessment of it that way. But if anything, me being the hopeless bull with which I am, if vol has come up on XRT between the 48 level and the 42 level, if you're getting some nice juice for, say, the 40 puts or the 41 puts for whatever month, once again, I have no idea if you would or not, depending on the month, because I don't really follow this that much. I think this, just from looking at a chart of it, would be a phenomenal opportunity if you are a bull in XRT to actually get into it. In terms of the Amazon index, I think that's a very fascinating idea. One thing, even in St. Charles, we have a mall here that just doesn't exist anymore. I remember being in high school. I grew up probably maybe about a half hour south of St. Charles, and I remember whenever we'd come up here, this one mall, the Charlestown Mall, was just phenomenal. It was hopping. It was just everywhere. It was everything. I mean, it was packed. But now there's one store in it, and I love going there now because I can take my kids there and they can just sprint all through the mall, and it's a great time because there's never anybody there. I don't have to keep a close eye on them because I can be 500 yards from them and see them perfectly clear because there's never anybody there. And I think that's just one example of what Amazon's doing. The other one, they're having trouble with the Stratford Mall in Bloomingdale. So out here in the suburb area, malls are definitely under attack. And I know, me personally, I'd much rather order something from Amazon than go through the trouble of going to the mall when I can just go to my phone, click a couple buttons, and it's at my doorstep within a day typically, or if you're a Prime member, maybe a little bit later. And if they're eventually going to have drones, heck, maybe I'll have it within an hour, who knows? But yeah, I think Amazon is going to go down as the great mall killer of our time.
Yeah, I definitely have a dog in this fight. Not that I own a lot of Amazon stock, I don't, but just you're right. I'm deep in the Prime ecosystem. If I have to buy anything, there's a very, very strong chance that it will come via the Amazon delivery. I'm looking forward to the drones landing here at the studios and bringing whatever microphones, cables, all that fun stuff. That'll be a fun day. Speaking of fun days, it's time for us to keep on rolling right on into our next segment. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that funkiest of tune. I shouldn't say funkiest because our Twifo theme song is pretty funky too. But that funky tune here on the old network means it's time to break down the weird, the wild, sometimes wondrous, sometimes just whimsical, sometimes just downright head scratching paper that is lighting it up in the old options market today. Going to kick things off in an interesting area. We haven't talked about this name in quite some time. This is 3D Systems Corp, ticker symbol triple D. D, not the one you're thinking of course, just the old 3D Systems. Instead, closing today, $16.73. Having a pretty good day out here, up about 2.25 or nearly 16% on the day. So not a bad day here for good old Triple D. And if you're wondering about this name, it does about nearly 8,000 contracts a day. Today, doing a fair amount more than that, to the tune of 55,000 contracts, a little more than 3-to-1 calls over puts, which is kind of what you'd expect on a day like today where the underlying is so heavily biased in one direction. Now, if you're saying to yourself, what was going up on a day like today? I bet you, just perhaps going out on a limb, that I saw some call buying. You would be correct. And there's a lot of call buying out here to kind of parse through. So we're not going just the biggest trade we saw, probably one of the more better timed trades that we did see going up today. These were the Jan 14 half calls expiring on the 20th. So these are just the straight up Jans, no weeklies. And the 14.5, of course, being right about where this name was trading. These were at the money earlier this morning. And right before all this noise, right before this big explosion, we saw someone coming in and scooping up exactly 1,000. So a nice round lot of these Jan 14 halves, paying 43 cents to do it. Total on the day of just 1,600 contracts. So maybe he piled in for some more. Other people maybe piled in after the fact. I said he paid $43. They went out at $2.43. So he made a nice $2, 1,000 times. So a nice 200 grand in his pocket pretty quickly there, Uncle Mike, which is not exactly bad for a little bit of quick work on the old thing. He didn't get a chance to close them out, so they're still open. So our friend, perhaps, he probably will be coming in soon to close these bad boys out. And looking back, again, I haven't had a chance to dig into today's news yet, so I'll do that in a minute while Uncle Mike is talking. But in general, this name has had a pretty strong year. Back at this time last year, they were hovering around, about $6 or so. So not a great run. Then they had a decent run into the early part of the year, up to about these levels, a little bit higher actually, about 18.5, 19, almost 19. Then they sold off again, kind of vacillating around that 12 to 14 range for the better part of the year. And then again, bam, shooting back up. So it's been kind of a bit of a roller coaster ride. And at least for the near term, this one is looking back on the upswing here on the roller coaster. Uncle Mike, we don't get a chance to have you join us on the Odd Block that often. So it's always a fun treat when you get to do so. What are your thoughts here on this roller coaster heading up and someone having some very, very well-timed calls here in Triple D?
Kudos to the guy that had the well-timed calls, first of all. I think it's obviously it was a beneficial trade. If you buy calls and something goes up, it's unless you're buying super far out of the money and it doesn't get there, it's probably going to be a good thing if you have calls and it goes up. So kudos to the trader on that. Triple D is an interesting stock. We've actually had, I actually have some history with Triple D, Mark. I know you're probably, right as I said that, you're probably sipping your coffee and choking as I said that, but there is actually a little bit of history with Triple D. It's an interesting company. But what the first bit of history with which I had on it was that the guys at RCM, we have our strategic night fund, and that's just where George and Chris and Tim, so they're basically the stock pickers, and I'm the one that hedges the market as a whole, and that's the hedge strategic night. But we work as a team in that. And those guys are the stock pickers that make the magic happen within that portfolio, which has done actually quite well. Triple D was one of their mistakes, and that was one of their bad ones. So I remember we actually, they got into Triple D. It was before the peak of it, but the peak of it was right around January of 2014. And so they got out of it relatively quickly. So they didn't really, they probably hung, obviously I always gave them crap saying, why'd you hang on to that too long? But they got out of it relatively quickly. So I don't really have too much fault for them on that. But on there, I remember in 2014, I have one client that I work with that oftentimes we'll do certain things to try and experiment. Well, let's try this strategy. Let's try that strategy. And we work together, and it's usually, sometimes it's an experiment, and a lot of times sometimes it works, sometimes it doesn't, but it's usually stuff with minimal risk. And so what we tried doing was trying to set up a collar system on Triple D. And so we didn't really, we ended up about breaking even on it, I believe. To be honest, I don't even know how much we did on it because it's been quite a while. It was about 6,000 trades ago. But what I remember about it that was just so fascinating to me is how this was just a classic straight up, straight down kind of stock. If you look at it back in 2011, I'm just looking at a chart here. At the beginning of 2012, it was at $13, and then fast forward 2 years, it goes up almost tenfold, and it peaks out at the beginning of 2014, just under $100 at $97.28, and then it proceeds right back there to where it was, and even a little bit lower to where it initially started that year. Now, Triple D itself, the company could achieve some great things someday, and it could be a wonderful thing, but it's having a hard time getting out of this range-bound area. And so with today's action, let me get up to a different chart here. With today's action, what Triple D does is in the short term, it actually gets rid of a lot of resistance barriers. But the next level with which it's going to have to go through before it really gets any respect from the masses, I believe it's kind of like the Dow 2000. Triple D is going to have to get above 20 before it actually draws any attention from anybody on whether this is broken out. Now, if you feel it's already broken out already, like the gentleman today did with those calls that he made a couple G's on, then by all means, you can get in now. But I think that it's going to be a little while before it gets the momentum players to actually come into Triple D again.
Yeah, just looking at some of the tea leaves while you were talking, Uncle Mike, this name has had a lot of speculation on it of late, a lot of call activity over the past couple of months out here as well, a lot of opening call activity. So this is not the first time they've gone this route. And as I mentioned, it was kind of a back and forth year for Triple D. If you look at that chart over 2016, an interesting one. And there's also a lot of speculation. There is some takeover spec, again, that could be potentially driving this, but there isn't a lot of clear chatter out there. Also, there is a pretty strong short interest in this name. About actually over 20% of the float has been sold short. So there is some spec that it could perhaps be a bit of a squeeze as people scramble in to cover a lot of that, which would certainly be in keeping with what we're seeing in the price activity today. Usually short squeezes, and takeovers do it too, obviously, but short squeezes are usually to blame for a lot of these sudden and immediate and inexplicable gaps up in light of no other news on an underline. Well, there you go, Uncle Mike. Thanks for sharing that. I didn't know your long and sordid history with Triple D. See, you come on the odd block and you learn a few things, Uncle Mike.
You never know. It's like you get the odd block. It's kind of like sharing our feelings. We get to learn about each other.
It's like the Dr. Laura hour here. We're all just confessing all of our problems and our faults to each other here, including your sordid history of Triple D. I'll make a note of that to bring it up in our next conversation with Triple D and Cisco and a few others that I know you love to chat about on a regular basis. All right, let's move on to another name that we've talked about a few times here on the show. I think almost as much for the ticker and the name is just for, not the ticker, but the name is anything else. This is IAG. That says IAMGOLD Corp. One of the better names out there. Closing today, pretty much unched on the day, right around $4.53. This is the name. If you don't know, they're gold. They are gold. If you want to buy gold, you just buy this stock because they are gold. They are, of course, a mining and exploration company for the aforementioned shiny stuff. They average about 3,500 contracts a day, so not bad for a cheapy name. Doing about 13,000 today, so about 4x or so on today's volume. If you want to find today's paper, it's not in the Jans. There are no weeklies on this name, so not in the Febs. Got to go all the way out to March, where we got the March 4 calls lighting it up to the tune of, when we first started watching this, about just a little bit under 5,000, going up for 85 cents, going up in one block on the Philly. As the day went on, it seems like this paper continued on their selling activity here to the tune of about 2x, about 10,000 of these contracts total. Paper, I said the first kind for 85 cents, the latter kind for somewhere in the range. It went out at 75 at 85, so they could have got 80 maybe, or somewhere in that range for the latter chunk. What's interesting about this is a couple of things. First off, if these are indeed long call holders that are giving up the ghost, they are giving it up here. These are about 50 cents in the money, so they could be thinking this is about all the juice they're going to get out of this and start trimming their position. Their position is pretty sizable. There is about 73,000 contracts open here on this strike, so they certainly have got some more scaling out, shall we say, to do if this is indeed the case. They got about another 60,000 of these bad boys to go. So if you're looking to scoop up some IAMGOLD calls fairly cheap, wait for our friend here maybe to start dumping the remainder of his position, and maybe you'll get a volatility bargain out here. Looking back at the chart, we see this name has kind of been vacillating around a little bit. Hit looks like about 5.5 or 560 actually back in August. That's kind of the high for the year or so out there. Otherwise, back a year ago, this thing was trading far lower, $1.25. So this thing has seen an interesting run, like a lot of gold names out here these days. And I think our friend here perhaps deciding that this $0.50 in is about as good as it's going to get for him, and he's going to at least take some of his position off, which I think, Uncle Mike, you may concur if you were him and you saw this history here in IAG, maybe you'd be scaling out of some of these calls too. But then again, what are your thoughts here on IAG and our friend perhaps closing some and maybe some soon all of these four calls in March?
Yeah, this is one to where if the Viceroy's out there listening right now, I can just feel his anger because of the fact that there's all these call options on a $4.50 stock. Would you agree?
Yeah, he would take deep umbrage, I think, at all of that. He said the stock is an option. What are you doing? You're wasting your time and your money.
I would agree. Yeah, and this is one where I think that when you trade that much size, I think you almost have to just kind of scale out like this because everybody knows that you have it. So, there is secrecy in this world, but if all of a sudden, I know that, let's say that you all of a sudden win the lottery and you keep it private, you don't want to tell anybody, but then all of a sudden you build a mansion and you quit your job and you're traveling to Europe every other weekend just because you can, your secret's not going to be very safe. So on here, I think it's kind of a similar situation, and I wouldn't be surprised to see more scaling coming in the days and weeks to come. The stock itself looks like it's probably been a pretty fun ride for them in terms of where it's been. The stock itself looks like it's if you've been in it, if you got into it at the beginning of the year, it's obviously been a lot of fun because of the fact that it's went from $1 to over $5. And if you just look at a 20-year chart of IAMGOLD, it doesn't quite go back 20 years, but if you look at just a longer-term chart of it, it's kind of gone all over the place where it is. I'm showing the low around the 115 level, which was earlier this year, but it actually had a high back in 2011 of almost $24. So this one's been all over the place, and I would definitely agree with the Viceroy in this one. If you are interested in the stock, buy the stock because who in their right mind would hold a $4 call going from $4 to $20? Likely you'd probably get out of that like what this guy's going to do. So I would advise people to just buy the stock. But then again, I'm not the one that just made that trade. So what do I know?
Yeah, that's small size for you. 73,000, I expect at least 2 to 3x that. That's a starting for Uncle Mike. 73,000. That's you do that before your coffee in the morning, sir.
Well, if it's on a $5 stock, what the heck,
Indeed, go big or go home. If you're thinking about going home, wait up. Particularly if you're a gold bug. We got one more here for you in the old odd block. And another gold name, surprise, surprise. This is we talked about this a while ago. I remember this ticker, but it's been a little while. It's one of the more memorable tickers again. This is the Direxion Daily Junior Gold Miners Index Bull 3X shares. I'll say that 5 times fast. Ticker symbol JNUG, JNUG. Closing today, $7.92, up about 35 cents or about 4.5%. On the day. This is the name that does about 13,000 contracts a day, so a fairly active name. Doing 46,000 today, about 8.5 to 1 actually, calls over puts out here. And if you're wondering what was leading the charge on that, it was our trade right here, quite frankly, that was doing the most size. It was the Jan weeklies, so expiring January 13th, not the regular monthly Jan. 7-9 call spread going up. Looks like paper selling the 7s, buying the 9s, starting off doing that about 6,800 times for a nice buck as the day went on. A total of about 11,000 on the 7s and about 12,000 going up on the 9s. The early kind is about 6,800 or so, went up on the Amex in 2 big blocks. Again, the latter kind going up also in a few big chunks throughout the day. Size open interest on the 7s to the tune of about 11,000 and change. And lo and behold, about 11,000 and change went up today. So looks like our friend is deciding to take a little bit of money and run. Another sign that this is a roll and he's got some money in his back pocket is he's going from 11,000 doing about 12,000 now. So doing a little bit more size on the 9 strike, indicating, he's not just closing them out. He's keeping the party going. He's rolling on up to the 9 strike, doing it for a little bit more size. Interestingly enough, too, Uncle Mike, he's not going anywhere. He's not going out to regular Jan monthlies or even out to Feb or anything like that. He's keeping it all in this same expiration cycle. So our friend here thinks there's more ahead, and he needs that to happen in the next 4 days. This thing, looking back at the chart on good old JNUG, I still love saying that. Good tickers on the odd block today. This thing hit a high back in midsummer of about 33 and a quarter, And since then, it's kind of been on a long vacillating trend downward with a little bit of a return to the upside in the last month or so. It hit a low of about 4.5 or so. Not actually 4.30, actually got south of $4 in right about middle of December. So this thing has rallied quite a bit since then. It's been all over the place. Our call buying friend clearly happy, but also thinking, Uncle Mike, this thing, the party's continuing. We see a lot of these types of rolls. I'm trying to remember the last time I saw someone in a weekly who's clearly closing out reopen in that same weekly with a few days left. A bit of a head scratcher, huh?
It is. I guess, like you said, he really feels that this is going to do it. I really don't like buying calls in this. I think that, to me, if you're an option trader, the inverse ETFs and the 3 times ETFs and things like that, I've always felt that that's a great solution from whence there was no problem, in that why don't you just buy more calls on the underlying itself? Now, I would tend to agree. I do agree with Andrew when he talks about the VIX products, how when they're, as he puts it, predictively crappy, in that if you're bearish on something, that maybe if you want to buy puts on them because of the natural tendency for them to go down because of VIX futures rolls. And I don't follow JNUG. Maybe this is something that you could do that with JNUG. I'm not sure. I know it's a gold miner index, so not sure how exactly that would work with the leverage on it. But kudos to him for the prediction and how it works. But I just don't understand why you would do this or buy options on something that has triple the upside like this, when you could just buy 3 times as much with something else and still get the same thing, and still most likely get a better bang for your buck to the upside.
Well, we got a gold heavy show today, listeners, and if you're not burned out on all the gold talk yet, well, we got more for you in a very special Monday edition of the Strategy Block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, have at it, sir. I know you hinted at something on gold and a gold strategy here, but I won't trot on you. Go forth, sir. The floor is yours.
Okay, what I want to go over today is it's actually on silver. So I guess it was kind of it's still shiny. So
that's
what's
it. You're
the
done then. I'm cutting your mic. You didn't say silver.
So are you claiming umbrage on me?
A wee bit, yes.
Okay, got it. Well, I probably would too. So anyway, I feel right now that we're in a bullish spot with the metals. And with that, I think it's going to be more of a thing, kind of like my XLE trade of last year, which I'm still in, by the way. So I know I've taken some beatings on that the last couple days. But I think that one of my picks to click this year is I really do like the metals. I got out of them, the long put was very deep in the money in December, so we missed a lot of the downside of December on this. But what I believe is going to happen right now, for reasons that I explained earlier in the show, is that I think that we're going to be in for some bullishness, or we're going to be in for a little bit of a bull run in the metals. So I don't think it's necessarily going to be from now until March or now until June or anything like that. I'm actually going out a couple years on this, and I'm actually doing this collar with options from January of 2019. And I want to go through why I'm doing it, how I'm doing it, and the plan of attack for how I'm doing it. So what I did, it was actually on January, getting the trade notice up here, on January 5th, I've actually replaced what gold position. I've had some gold allocations on the sidelines these last couple weeks. Half of it I switched from gold to XLF, which I talked about on the show recently, and the other half has kind of been sitting in cash for a couple weeks. But what I've decided to do with it is use silver this time around, because I think I have a more passive way with which to hedge silver on the way up and still have it collared. Now, when we first started this show back in 2010, I was a very big part of the gold and silver rally, and we talked about it a lot on the show, and it really worked out well for myself and a lot of clients. However, I was able to capture a pretty decent portion of the initial gold rally, but I was not with silver because it just moved too darn quick to try and roll the call, roll up the put, do all these strategies that we talk about on the show. If the thing moves too darn quick, it ain't going to work. I know there ain't no such word as ain't. So my apologies to our English teacher listening audience out there. So with that, I wanted to have something that would make a little bit more sense and then really not cost any premium. So the other day got into silver for a cost of $15.72. And right now, silver, I'm just showing today, it closed at $15.70. So really nothing's happened as of yet with this trade, quite honestly. Now on there, I actually went out to 2019, 2-year trade, and sold the $25 call. I collected 78 cents for it. Now that gives us the potential upside. Just doing the math again real quickly, 25 minus 1572, and then I divide that by 1572. That's 59% as a potential upside on this trade. Now, granted, that's over the course of 2 years, but I'm willing to bet that if we actually get to this and we're actually able to close above $25, I'm probably not going to get any client complaints of only 59% over the course of 2 years. It's averaging just under 30% a year on this trade. Now, with that, of course, you always have the question, well, what happens if it goes down? And that's a very real question. It's something we talk about on this show. Not only do we address risk, but we embrace risk. I didn't want this trade to cost any money. I wanted to get my protection for free. I'm not getting any juice, but I'm getting protection. So I can't say I wanted to get my juice for free, but I wanted to get my protection for free. So we sold a January 2019 12 put. We sold it for 77 cents. That's 1 penny below what we got for the 25 covered call. So by doing this, it's not costing us anything except for commissions. And let's take a look at what the downside risk of this is. My downside is from 1572 to 12. So that comes out to $3.72 divided by $15.72. It's a potential downside of 23%. So by doing this, what we've actually created is, and let's say that I do absolutely nothing. Now I'm going to do things on this, which I'll talk about in a second, but let's just say I do absolutely nothing. This is almost, it's not quite, I couldn't quite get the fills just right on this, but I came close to it. This is almost a 3-for-1 risk reward. You're risking 1 to possibly make 3, meaning that over the course of 2 years, if you can make almost 60% and risk almost 20%, then that means your risk reward is very much in favor. Now, I've really liked silver a lot lately, and I've taken some pain on it with one of my more conservative silver trades that I talked about on the show a couple months ago. But in reality, that trade's only down about 0.5 to 1% right now, just because it was so insanely tightly hedged. But what I like about silver right now and the volatility with which you're getting is the long term, because of the fact that metals and commodities in general have this reverse skew to them. You can really come out very favorable in this. Now, why is that? Now, we've talked about the skew on this show many times in stock, and I know we've talked about this reverse skew before, but I just kind of want to go with the theme of how I'm using this to put it into real action with real money, with real people. Oftentimes in stocks or in the S&P, if you have a call option that's 1% out of the money, if it's priced at $1, let's say, the put option that's maybe 1% out of the money would probably be priced at maybe $1.15, $1.20. And the reason for that is because of the fact that by doing this, there's more demand for put options in terms of option buying, because there's more paranoia and more fear in the marketplace that the stock market's going to come down, come crashing. So everyone wants to protect it. So that's just the natural skew. In the commodity world, it works the opposite, because if something bad happens, in theory, holy cow, something bad's happened, and then there'll be a rush to the metals. Now, that's all theoretical, and whether that's true or not, most of the time it is, but it's not always true. But this is a case with which I've used this to make it true, to where I can look at my clients in the eye and say, okay, well, this is how much we can possibly lose, and this is how much we can possibly make. Now, with that being said, what's my plan if the stock goes up, down, or stays the same? Now, not by stock, meaning SLV, the ETF that tracks the price of silver. Well, if it stays the same, it's not doing anything. I'm not going to do anything. I'm just going to sit there and enjoy the fact that it's doing nothing, quite frankly. And if it does nothing for a long enough period of time, then what will happen is that call premium Now, this is unlikely that's going to do nothing, but let's just say it does because you have to address all three scenarios. If it were to do nothing, then that call premium is eventually going to go away before the put premium does because it's so insanely far away from the underlying's current price. Now, by eventually, I'm talking probably, I would guess, and maybe it's a 24-month option. I would guess maybe month 20, and I might even be generous by saying that. So that's probably not going to happen, but if it does happen, that's my plan. If it goes higher, every time it's above $15.72, I'm going to do nothing. I'm just going to smile. That's my strategy, smile. Because of the fact that if we go all the way up to this 25 level, and once on the way up there, I'm not doing anything. What the heck? Why would I do anything? My underlying's up 30%. What's not to smile about? When we get to the 25 level, I'd make a decision at that point whether I should roll the call up to roll the collar up or just get out of it. Because let's say it happened tomorrow and I can make 10% over the course of a week or whatever because the options are skewed in such a way that that's all I would make. Well, then I'd probably get out of it. I don't know at this point. But between 1572 and 25, smile. That is what my strategy is. When it starts going down, this is what you really need to be concerned with. The first two are easy. Any idiot can do that, quite frankly. When it gets to 25, you got to have some intelligence of what to do. But the reality of it is if you're making money, no one's going to complain. And this is something that it's very well set up, I think. What you really need to have a plan for is when it goes down, or if it goes down, I should say. As it starts going down, what my plan is to roll down the 25 calls. Let's say that I just continue to roll them down. And I roll from 25 to 22, 25 to 20, whatever the case may be. I'm actually offsetting some of the loss as it goes down. And that's my plan to avoid losing a full 23% over the course of 2 years. When it actually goes past 12, then maybe I'll stop, maybe I'll continue, not sure. But the plan between 1572 and 12 is to roll down the calls in a vertical fashion. And if we do go down to the 12 level and we continue to go down, then at that stage, I'd want to see where the options are, what the loss would be, because obviously we will have made some money on the options. We're not going to have the full 23% loss. Hopefully I'm not rolling them for free. Otherwise, then I'm going to become a trade on the odd block with the size I'm doing on this. But it's very likely that it won't be much of a loss down to the 12 level because of the aggressive rolls with which I'd be doing. If it gets to that level, and I don't think it would make sense to continue to roll down at the 12 level because then you're just in a complicated, inefficient bear position, and that's not what anybody wants. So at that point, we'd make a decision as to how to roll the 12 put out or just get out of it because maybe at that point, silver really stinks. Who knows? But that is the strategy block for today on silver. And we'll see where it goes, folks. But we'll likely be talking about this a lot more in the course of the next year or so.
There you go. Long-term collar. You don't get one of those coming out of you very often. Interesting stuff. Well done, Uncle Mike. And now we'll keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is where we tell you what we're watching, and we can fit in really quickly what you guys are watching, too. We've been asking you guys some interesting questions here to kick off the week. We asked you last week what we said total options volume dropped 2% last year. How will 2017 stack up? And we gave you choices of about the same, or modest increase, so up 1% to 2%, a modest drop, down 1% to 2%, or a big change. I forgot, Uncle Mike, did you vote for a modest increase? I thought you were in that camp, right?
I was in the modest increase camp. That is correct.
Okay, well, you are a wise man, sir. That's what our listeners voted for. Nearly half, 46%. An overwhelming victory for a modest increase with number 2, 32%, saying a big change. Plus or minus 2%, over 2%, I should say. So we'll see how that stacks up. Looks like a lot of our listeners are in the camp of something big's happening from an options volume perspective. That certainly would be interesting. Fast forward to this week. We just posted, actually, right before the show. People are already piling into this one. We asked you, hey, VIX hit a high of 28 last year. How high will VIX get in 2017? And we gave you these choices. Listen up, Uncle Mike. We said about the same, so somewhere in the 27 to 29 range. Slightly lower, about 24 to 26. Slightly higher, so somewhere in the 30 to 33 range, or much higher, above 33. So, Uncle Mike, what is your vote, and what do you think is winning?
I will say slightly higher for me because of the fact that I have faith in our president-elect and his Twitter account. I think that we will get a few runs above 30 at some point. I don't know about too much higher, but I will say slightly higher. And I think that's what the audience is going to say as well. So I'm going to go with slightly higher. Once again, faith in the old Twitter account.
I already weighed in on this on vol views. I'll have to go back and check what my prediction was to make sure I have some sort of correlation between the two. But you're right. I'm kind of vacillating between slightly higher and the much higher camp. I mean, last week was a pretty low vol year, so 33 is not that high of a level for at least a quick blip above that level. I can see us blipping into the 40s. So I'm gonna go the much higher camp, and that apparently is where our listeners are feeling right now. Overwhelming, nearly 48% picking much higher, Uncle Mike. So a lot of people feeling there's a more vol on the horizon, and then 22% saying slightly lower, 15% in your camp, Uncle Mike, saying slightly higher, 30 to 33, and about 15% saying about the same, 27, 29. Again, we just posted that before the show, so you got all week to vote, but get out there if you haven't. Add options. Make your voice heard. And aside from that, Uncle Mike, not a heck of a lot on the old radar. So, well, you got a long-term radar now. You got a couple of years you're looking out ahead in silver. But earnings still on the horizon, not for a couple of weeks before we start getting Alcoa. That is the traditional kickoff to the earnings season. So while we're waiting for that, Uncle Mike, what is on your radar? Obviously, the 20th, something will be happening, but what's on your radar for this week?
20th. Oh, yeah. Let's see. Well, we have, not a lot in terms of earnings or anything along those lines, but I'm definitely going to be watching silver very closely, and I'll keep everybody posted on the show as to what I'm doing, how I'm reacting to it, or how I'm adjusting the trades, that type of thing. The other thing that I've been watching lately that's kind of had a little bit of life breathed into it is our beloved bonds. If you look at TLT over the course of the last month or so, we've had a nice little run-up. I think that we are at a point, technically speaking, that it's kind of at a crap or get off the pot type of a spot to where it needs to get above where it is right now. And then the next level of resistance would be the 127 level, or around the 127 level, because that's where the gap had come down. So watching that, I don't have any trades on it per se, but I do think that if we do have some bearishness in this marketplace, that might not be a bad spot to be if you are a market bear.
I like it. Well said, sir, and well done on this show. You had a lot to say, and we got a lot into commodities, which was always fun here on the show. A little bit of a preface for TWIFO. There we go. With the music kicking in, though, that means we have come to the close of this metals-heavy sojourn through the world of options. Kicked it off talking about Dow's epic failure to hit that 2,000 level. Talked a little Apple, a lot of gold. And then, of course, some crude and some retail issues, and got into a bunch of more gold in the odd block. Then turned on the side of the coin there to silver in the strategy block, and then looked ahead for all things VIX. You guys calling for a lot of vol out there, so we'll see if that comes to pass. But unfortunately, that's all the time we have. But before we go, Uncle Mike, really quickly, what's cooking in the land of all things going along at RCM Alts aside from slavishly watching silver for the next 2 years?
Go along, folks. Buy my book. Go to the Amazon Kindle app. You can get it for less than the price of a Starbucks, and you can learn a little bit more about what I do. And then if you do want to be one of my financial advising clients, or just talk and figure out what it all entails, feel free to give me a call at 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
There we go, folks. Join him there. And they couldn't make it, I should say. They're stuck deep in the heart of Texas. I'll give them a plug anyway. The boys over there at optionpit.com do a lot of education for you folks. If you're confused by any of the terms we use today or anything like that, head on over. Chances are they have a webinar. Maybe they have an upcoming webinar that may interest you. Optionpit.com to learn more. On behalf of Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. Hope this new year is starting off well for you and yours, and we'll see you on Thursday for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.